All right, so I'm going to show two scenarios probably for today, my two winners this week. I don't like to go over every single position for the week. Every time I take positions, either within the day or two, I make like a small pre-recorded video, but that's for the members, of course. I don't really want to do all that public and it takes a lot more time. So I do like to keep maybe one, two, three at most for these public Zooms, just so I can take maybe 10, 15 minutes to get over that, and then we can get into case studies and all of that. So um, let's go ahead and get started with our, well, with scenario one was EU. So for the most part, this week DXY was extremely bearish, and we were kind of anticipating DXY to continue its internal trend. And I mean, if we're going to look at that real quick, let me just pull that up. Um, so, right, for the most part, internal trend was bearish, and we were anticipating this to continue to be bearish. We can see from the start of the week here, I believe, yeah, somewhere over here, right? We had our internal pullback, and then we're kind of just anticipating the reaction from this point of interest, which was on Wednesday of last week, to continue lower, and we were expecting this low to be taken out. So that's kind of just the overall bias. Like last week, we had reaction from a point of interest, buy to sell, that caused the internal break of structure, creating a high-low retracement structural range, and we're expecting the ABC to then take out the previous low. So that's kind of the overall just gist of the bias for the week. And if we're looking here, clearly we're seeing internal structure be bullish, which, as we discussed last week, there was the EU position, sorry, that was here. And so we're just looking at a correction, impulse, correction, and then an impulse to the upside, right? That's kind of just as easy as it gets. So how I frame this bias, right? Like I said, low into high, and then I have a SC followed by an engulfing. You guys know how much I love my engulfings. Not to mention we are relatively around the 71 fibs. So as we begin to zoom in closer, obviously, all right, we are technically still bearish from an internal POV, from a scalp POV, because we need to be bearish in order to reach the bullish POI, which is the gray region. So the reason why I took this scenario was, for one, we did hit our 71 fib. We did sweep this low, but more importantly, right, we're looking at the internal microstructure, create a high into a low that's then taken. And on the M2, we actually had a bullish engulfing here. So my position was taking the inefficiency, SO on the low, and I am targeting, right, the intraday structure here, which we can see on the next picture. That would have been the previous high here, right? Which is also paired up with the Asia session high from the previous day. So that was kind of what we were anticipating. And then this kind of just rocketed right immediately after that. And I actually found a second play here. I found a second play here, right? Just because, as you can see, we did take out a previous wick low, which implies that internally there is some type of structure break. So once this low then takes out the previous wick high, right, that then creates a solidified low, which is creating an internal micro structural range. Obviously, once we take out this low, that solidifies the high. So that's creating, for me, an internal structural range. And I could have also probably fibbed this up too, but I just did like the M5 point of interest that we have here. And then from here, this is about another 1.1 to 2.5-ish. And then we're obviously aiming for the same high as the original position. So just based on that, I believe I got like a 1 to 5 and a 1 to 2.5-ish, something like that. So yeah, as you can see from there, we went straight to TP. So overall, just this is probably one of my better scenarios of the week, but I really did like this scenario more just because it was extremely conservative. We've already solidified this low from a scalp POV because we've taken out the structure point here, right? So that means that we've solidified from the 71 fib on an external bullish trend on a bullish POI, and we have the solidification internally. So from every time frame, we're pretty much all aligned. So that's why this to me was my conservative entry, which is A plus to me. Scenario 2 was actually SD. SD where? I don't see an SD here. This would be considered. So because we broke this, no. So okay. Hold on. So because we broke this, right? The internal is now bullish. So if I was to do this, then that is an LGC because we're continuing the internal bullish trend. Right. There is no SD here. If we're looking from high to low, high to low, high to low, then we broke the structure. There is no SD. It's LGC. It's an LGC because we have an LG here present that's in confluence with the already bullish structure here. If we were to, so SD pretty much is if we have a bearish trend, we solidify the pullback, and then we take out the structural point that's already solidified. Right? But inherently, this is a reversal move, right? So this transition did not happen within the range, so it's not SD, right? Whereas with LGC, right, which technically even here, this is the LGC, and then I'm just looking for the excuse for the entry. So it just depends on which model you're looking for and how you're looking at it. Internal bearish, no, I mean it's technically it's this internal is bearish, yes, bro. But if we were to take the structure out, this is unwillingness based on the previous low. So this is not bearish after this structure break. This here is not a trend. It's just a pullback.
It's still too aggressive, no?
How so?
The first one, it could just lead to a CBOS and then continuation on that. You see a very
Oh,
high
yes,
momentum move to
yes.
the
If
downside.
I
I think the
if I wanted to
second one is
be
very good, but the first one I think is too aggressive.
inherently aggressive, yes. If I was to want to be as conservative as I wanted to be, then I would have put my SL here. Does that make sense? So yes, aggressive, yes here, and then this is conservative. But also, this is also it's an accumulation scam here. If you see this, all right. So once you have the sweep engulfing, right? Like I said, this is why I really enjoy engulfing, just because they're probably the biggest telltale sign for me, especially um and honestly, even from any time frame. Like for example, if we go here, right, the engulfing here gave me the frame for the candle to use as a reference point, whereas internally the engulfing here, which is an M2, and I think we can even go back and find it so you guys can see. Um, we'll come back to that, but this was my position on Wednesday, I believe, something like that. Wednesday, July 24th, Thursday. And we'll come back to that. But the engulfing, right? So the problem too with looking for transitions is that if you wait for the entire transition to occur, a lot of the time you will not get the move. A lot of the time, you might, unless you catch an immediate continuation, you might not catch the entire move. So majority of the time, some type of structure has to be against you, whereas you're aligning the external, which is bullish here, and then the internal of the internal here. So, but if you have all three in alignment and then you have a model, excuse me, then that's considered an A plus plus. Is timing key in this liquidity acquisition? Yes and no. Yes and no. It's like I think it's too simple to think that moves will only occur on certain times of the day. Although on average, moves do happen on certain times of the day, but it also depends on what assets you're looking at. Like if we're looking at dollar, then obviously we're looking at New York and London to be moves. But then when you're looking at like an AU cross, when you're looking at a UJ cross, then the Asia session will provide you a whole lot more opportunities compared to like EU, AU. Right. So the timing really just depends on one, the type of trader that you are, and two, the assets that you're trading. Right. If you're a swinger, then no, that really it doesn't really matter. But if you're a scalper, then yes, it does matter. But then it also depends on which assets you're looking at, so you can see which session is a priority to you. Hope that makes sense. But yeah, anyways, move on to the next one. The next one, this is one of the best setups I've seen in a while, if I'm being honest. It's one of the number one setups I've seen in a while. And once again, an engulfing candle, which was probably why one of my number one things here. So just like EU, we're internally bearish, right? And although this is a SD here, is the SD scenario for you, so you can reference this. Internally bullish as well, right? We do come back into a pullback, but if you guys have been following me for a long time, you guys know that I don't like to trade deep retracements, like 90% retracements. I don't like to trade those. So if we're looking at a structural range here, right, I see a pullback here that's extremely deep, but at the same time, right, there's a conflicting issue here where the trend is bullish, but there's already been a failed reaction. If you guys can see here, the failed reaction, right? But then there's another transition here, right? Potential transition because internally here there's actually like a M5 move here that I saw a couple of people buy, but it's not something that I like because the retracement was just so deep. I don't like when this stuff like comes all the way down to like a 95% retracement, and I'd hardly ever see that come to the upside. But at the same time, that type of behavior is something that I would only really notice if it is to happen with like the GBPs. Like I see that with more so GJ, sorry, and more of those GBP pairs, which is what kept me away from these types of pairs over the past couple of years. But either way, I've kind of just stayed true to that rule. I don't like that. But if we're looking at internal structure here, let me actually zoom in for you guys. Okay, this is doesn't want to zoom in. Okay. Okay, never mind, never mind. We'll come back to it on the chart. Uh, yeah, we'll come back to this. But just in summary, right, we did see a failed reaction here, which means that just by default, some type of by default, right, we have a failed reaction here. I'll come back to your question, bro. I'll come back to your question. Um, by default, we have a failed reaction, but if there is a failed reaction, that means that there has to be some type of remnant left, which is technically a candle of interest, which is that buy to sell that you see there. So to see that, have a reaction from it, and then have a very impulsive bearish engulfing, right? That also takes out internal structure here. Then to me, I'm kind of anticipating this to be a structural disruption because we're internally bullish, right? We see the CBOS, the continuation to the upside, but then we see the reaction, the internal counter break of structure plus an engulfing. So that to me was signification of an SD, which would then give me the option to do this, right? And I'm aiming for relative equal lows. So the result of that was, right, pretty much a perfect tap in. And actually this one is a bit, yeah, okay, it's more clear here for you guys to see the scenario. Um, like I said, point of interest here, right? We did have that M15 engulfing and we did break a previous low. And not to mention, right? So the reason why I consider this a structural low is because it took out a previous wick. This is the reaction here, right? That took us into that M15 point of interest. And from there, it kind of just gave me an immediate reaction here. And what sucks is that if I was still potentially swinging a lot of my positions, this was actually like the high of the rest of the week, right? Like this actually melted for like the rest of the week, which we can come back and look for. Let's go ahead and go to, yeah, here's the scenario, right? Where we had here the position on the M15, right? Let's just say give or take position was somewhere. Actually, let me see where it was. Okay, at the open of this candle. Open of that candle, SL at the top, right? Like this actually went on for the rest of the week because I didn't anticipate DXY to just kind of correct, to kind of just give an entire move like that. And I actually think now we're fully transitioning on DXY. Like if we're looking at DXY, um, it's a very interesting scenario right now, just because of where we're at. So I need to delete all this stuff. Actually, it's ages ago. Um, but from the overall POV here, I actually think we've kind of transitioned. I think we could potentially start seeing some upside. I don't know if this is like going to take us all the way to create new highs, but we are coming into the month of August, and based on seasonalities, the next 2 months-ish are usually pretty bullish for dollar. I can show you guys the chart on that too. But I am looking at a 71 fib here, and this could potentially start giving us some movement into the upside. And then once we begin to zoom in, um, we're actually bouncing off of a daily inefficiency here. All right, daily inefficiency here. We're kind of bouncing off of that, and we have an engulfing here. So the one thing that's kind of throwing me off a bit was the weekly closure. I don't know if this is enough for me to completely switch because we're still technically bearish. So I guess the next Monday or Tuesday is going to be the telltale for me on whether or not this is going to convert to the upside or not, right? And then when I was looking at EU, I almost took a scenario right before market close, but I didn't take it. It wasn't like I don't want a gap to screw me over on the new week. But as you can see, we swept the high, right? We had the transition. We then had, right, unwillingness to continue higher. Why is that unwillingness to continue higher? Because we took out, right, as you can see here, took out liquidity and then took the internal solidified point here. So that creates an internal structural range, which is bearish, but it's counter trend that's justified because of the initial sweep here. So I was kind of looking at this to see if we can take this lower, but it's Friday, so kind of just waiting on that. And yeah, as you can see here, right, this is the position that I took only up to here. But this actually went on way further. I didn't think I was actually waiting for a pullback here, but never got it, as you guys can see. Never got that. Same thing with USD CAD. I didn't get any entry. I was waiting for some type of pullback into a point of interest to then go higher. Didn't happen there. And then this one I'm not really looking at. So let me go ahead and go into you guys' questions. So yeah, those are the two. With trade frequency, do you still find yourself having 2 different trades a week? It varies. It could be like 3 to 6. It could be like 3 to 8. It just depends on how much stuff I'm looking at. So last year, before I get into that, let me finish your question. I remember one of the old 2020 webinars. Yeah, 2020 webinars 5 years ago. Yes. You also see this as something that's doable consistently while ensuring that setups are high quality on a month-by-month basis, where someone's watch list is just 2 pairs. Well, that's too simple of a question, bro. It's way too simple of a question. Like, is it possible on 2 pairs? Well, okay, like what kind of trades are you looking for? Are you a scalp intraday swing trader? Are you how many models do you have? How effective are the models? Right? Like on average, how many times are you seeing these models occur per pair? Right? And does it change per pair? Like that's just too simple of a question. Is it possible? Sure, right? But possible is irrelevant. Probable is more relevant than possible, right? Nobody cares what's possible, people care what's probable. Um, so is it possible? Sure. And then it also depends on what you consider high quality. Like, are you going to consider something that just follows a model, an entry model, as high quality? Or does it have to be pro trend? Can it be counter trend? Is a counter trend plus your model considered a high quality setup? Like it's too simple if that makes sense. Can you touch base on your GDP relationship?
Excuse me, Trevor.
Uh-huh.
I actually have a quick question regarding this setup.
Uh-huh.
Because
This one?
yeah, this one right here, because it seems like something happened here internally. It's sort of SD.
Yeah. Mm-hmm. Yeah, too. Yeah.
Yes.
SD, let me see. Hold on.
This one.
Oh, I see what you're saying. Yes. Could be
Yeah,
yes. Could be yes.
exactly. Because
So,
yeah, I was looking for a sell too, but when I saw that, especially the fact that the price this week is actually tapping into the efficiency in I think 15 minutes or something, or even 30 minutes. And then we had a positive reaction right here, and then it got nullified. Check
hmm
30, something like that. It's probably an hour, I guess. Yeah, right here. We tap into our inefficiency right here, and then we give a positive reaction toward the
I
down.
see what you're saying.
Exactly. So,
Yeah. Yeah. Yes. Technically, yes. You are correct. That's also, I guess thank you for adding to my reasoning as to why I shouldn't have taken this. But yeah, I didn't want to take it because it was the end of the week for one.
yeah.
But yes, you are 100% right. This is technically SD here. That's some good eyes there. Yeah, the inefficiency here was tapped, and then you technically have order flow disruption based on the inefficiency fill.
Yeah.
So technically, yes, based on the model, we should be looking for
All
that.
right.
Two here, and then from here, who knows?
Exactly.
Yeah, yeah, yeah,
That was great.
yeah, 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 that was good.
Because I
But
took
yeah, that's
a
uh-huh.
very a very aggressive, I would say. I think sell right here. Hold on. Right here.
I wouldn't call that aggressive at all, bro. I was looking at that scenario. It was like at 3 in the morning my time. I was
Yeah.
looking at that scenario because I was looking for it to take out these lows for one, this low here, but equal lows here. But I was looking for Asia low. That's actually this is a very good setup. Let me show you why. I was looking at that setup. Me and Andre were looking at this the other day. I was looking for this.
Okay.
I was looking for that, right? And then for this to get there because we swept Asia highs and then we created the transition, the unwillingness to continue higher here, and then we
Yeah.
created the internal range, and then this was the scenario. But I think if we go to M1, I saw this when it was like here, right? Yeah, it was like 3:30. Yeah, it was like 3 in the morning my time. It was already here, and I'm like, please come back up. I was like, if this comes back up to I was looking for the M10 wick here. If it came back to the wick here, I'm like, I'm taking this 100%. But then it just kind of just left me from there. But no, I wouldn't consider that aggressive at all. This is a sweet model for sure.
Okay, I thought it was because the price was sort of ranging, and at the same time, we didn't have we had a LG right here. It's sort of
Uh-huh.
and then unwillingness right here. So look at me already selling from this area. It didn't make much sense to me, so I thought it was aggressive, but I did take it, and
Yeah. So that is correct because then you have to think about what the point of this and this and this would be. It would be to pursue more liquidity, which is here, right?
yeah,
That's why, like we said with the EU, if it buys, it goes into there, and then we don't know what happens next. Because yes, these scenarios here technically are to buy here, but then based on the reaction that occurs here, then we're dictating whether it's gonna go lower or go higher, right? And
yeah,
then you can see unsubstantial new high, and then you see, right, the internal break, unwillingness, and then the structural range into the buy to sell.
yes,
So
sir. Okay, understood. And the same type of model I would say happened just the previous day at the high.
yes,
That would have probably be very aggressive, like somewhere around here.
yeah, yes.
Yeah, because we only had a sweep of liquidity, and then later on, you know, after this sweep right
hmm
here, and
Yeah,
then
that's why I took the GU, the this scenario, I took it in GU, right?
oh, okay,
I took the buys here, but the GU setup was a lot better. That's the one
okay,
that I took, which was this one,
yes,
where we had the internal buy, and then there's an M15 POI here, and then there's an engulfing. Plus, the engulfing led to the structural disruption based on the break here.
okay, understood.
Yeah, the engulfing, structural disruption, right? And then if I was to have been a bit more conservative, there's actually order flow disruption after this POI is taken here.
Yeah,
And then I could have taken potentially the buy to sell here.
okay, I see that. Perfect. So
hmm
yeah, that was my question.
Yeah, yeah, that's good. It's good. No, yeah, you're 100% fine there. You're right on the initial SD. But yeah,
Right.
guys, for y'all that don't know, that's one of my admins in the group for the people who don't know that.
Yeah. Thank you, man.
Yes, no worries. Okay, any more questions? Can you touch base on the Euro GBP relationship? No, no, no. I'm not getting into that in the free channel, bro. Not getting into that.
I have one on the second trade you took,
Mm-hmm.
if you can show it
As
real
this
quick.
one.
Yeah, on
Yo, do you want to see the chart or do you want to see the just right here?
the picture you took on the. Okay, wait, I forgot about it. Okay, the second entry, I understand, but the first sell, can't you just consider this like a CBOS to the downside, you know, when you go down to the POI and then you see BOS to the upside, you can't really, I think,
I
buy
don't know. I don't know
from
what you're
the.
talking. I don't think
Oh,
I don't know
sorry,
what you're
sorry.
talking
Let me
about here.
animate. So we transitioned here to bullish, like the external, right? But then taking a buy from here, I think it's too aggressive because this can just be a CBOS to the downside here.
Yeah, yeah, definitely. That's why I didn't take that.
Yeah. Oh, okay. Thank you.
Yeah, I didn't take the buy here. The buy I took was on EU.
Yeah.
This is
Oh, yeah.
GU. This
When
is
you,
GU. This is GU.
yeah, that was
Mm-hmm.
the aggressive one, right? When you come to the POI,
Yeah. Accumulation
it
scam
happens.
on the
Yeah,
internal.
it happens a lot. I see that when you like do an LGC on the macro on the or on the scalp, it can very quickly do another transition to the other side. Do you
But that's
understand
what
where I'm
you
coming
want to
from?
catch. That's what you want to catch though. That bullish to bearish transition, that's the whole gist. That's what you want to catch because that's the beginning of a move, right? Like those transitions, like that's what the entire cycle is. Let me show you. RIP, Mr. Richard. Okay, did I pass this already or what the fuck? Okay, I think I passed it. Okay. That's all these are, bro. That's the so Wyckoff and give or take, right? And a gist is a study of transitions, right? What do you call a transition? A range, right? So that was the trading range, right? Is where you if you understand how to read a trading range, then you're able to dictate and judge how or what direction it's going to take and how it's going to take it, right? So for example, like you said here, right? Let's say this is internally bearish, right? And then there's the sweep here, which leads into a move, and then you can try to catch a position somewhere around here. Whereas then you have another transition, another transition, etc. Right? But this is initially made for stocks, but the concepts kind of align to an extent, right? And that's why we use right liquidity and all of the other structure and liquidity to read the trading ranges. But it's all based on the theory, right? That the study of transitions will tell you, give or take, what direction price will take. But more importantly, that transition is what's going to be the beginning of a move, and that's why you can consider the transitions within those transitions the scenarios that are technically A plus. If that makes sense, I hope that makes
Yeah,
sense.
so you're looking for this and not for this.
I'm looking for the transition. No. This isn't. No, don't take this. Don't take this literally. Don't.
No,
This
no, no,
is.
I'm not, I'm not, I'm not. I'm just saying like
Don't take
when
this literally.
you bought the EU, it was more of this,
Hmm.
you understand me? Instead of the second one, which was this was more probable.
Hmm.
You had the
Probable is relative.
transition.
Probable is relative.
Oh, I see.
Yes and no. Yes and no. Right. I wouldn't take that too literal. But this is more so intuition than anything. Right. I just had so much conviction. And if, we'll actually go back to this one. I'll show you guys this one. So you guys can see the engulfing, right? That's just confirmations that align over time for me. And the engulfing is the one I've incorporated over the past 7 months. Uh, you either get it or you don't, bro. You kind of just get it or you don't. Where is this? It was GU. Oops. Here. Right. That engulfing. That's kind of just what gave me the whole gist. Sweep of liquidity engulfing, right? Off of the 71 fib, off of the bullish trend, off of the bullish POI. Just makes too much sense. right? And this in and of itself, right? This is a bearish to bullish transition, but it wasn't confirmed until here.
If I may so say, because you are kind of bearish to the POI, I would say that this can
It,
just be a CBOS to continue lower, for example, from like a
that's
buy
not
to sell
technically
here.
true. That's not true if the external range is bullish. That shows that this is unwillingness. This is a solidification, technically. But like I told you, if you wait for every single time frame to align, you will miss the setup a lot of the time.
I see.
So you have to accept some type of risk. You have to. There is no going around that. So yes, yes, you're right. You're right. I'm not saying you're wrong, you're right. But I understand that I'm gonna take this risk. And at the end of the day, all that matters is if you win or lose. Like the only absolute here is result. You know what I mean?
Yeah, it's 50-50.
No, it's not 50-50. It's not 50-50, bro. It's not 50-50.
It's
If it
either
was
you win
50-50,
the trade
if
or
it
you
was,
lose the trade.
yeah, exactly. If it was 50-50, then 90% of people would not be losing money.
Yeah. Thank you for the explanation.
Yeah, it's a mind fuck, but I mean, welcome to the game. Because a lot of it too, like you have to build up intuition over time. Like sometimes you will have that feeling where it's just like, yeah, like we're gonna get in, and the only thing that sucks is that if you rely on that, then and if you lose, then it can be a mind fuck.
Okay, so another like question. How can I ever be confident if I see, okay, external is bullish and this is bearish? Isn't this a CBOS now to continue lower? Like, why is it? Oh,
What trend are we looking at, brother?
yeah, the trend is it's up, but
Okay, thank you,
the internal
thank you.
sometimes
Nope, nope,
takes
nope, nope.
control.
Yes, and then that's why, right? It's justified that if you take scenarios here and here, you might break even, and here you break even. But it just depends on how aggressive and conservative you want to be. If you want to be extremely conservative, then put your stop loss either at the POI low or at the range low. Because by default, if something is going to continue in a trend, right, it will never reach this. But I know that if I take that scenario, I'm only looking at like a 1 to 1.5. So I'm going to add more risk based on trying to enter in a more aggressive scenario so that I can get a higher risk to reward. That's my risk.
I see. So waiting for like another transition after the transition, which could be a CBOS, is not always the best play because maybe you're just gonna
Well,
miss
what
the
do you
whole
mean by
thing.
best? What do you mean by best? What does best mean? It just means that the
Best
probability
means,
of you getting
yeah,
it just means that the probability of you getting the scenario and get your entry will be less because a lot of the
exactly. You
time if
might
you
not
wait too
get it.
much, you will miss the trade. Like not always, right? But you will more than likely miss the trade if you wait for more transitions. What do you mean
Like,
by transitions? Ranges, bro, ranges. You study the range so you can see the direction that it will take. You study the transition to see the direction it will take. And sometimes you can get your entry inside or you can get your trade outside. It varies. It varies.
Hello, Alfredo.
Hello, hello.
Hey, I wanted to send you like or show you what I guess I wouldn't say live trade, but like I was looking at it because I didn't really trade or anything. I was just looking at it. Is it okay with you if I can share it? Okay.
You want to send me the link on the chat or in the Discord?
Um.
The trading view link?
Oh, I actually I don't. I sent it on my Discord because that's where I keep track of my trades.
Then forward it to the public Discord and I'll pull it up. Let me see. Where's my Discord? Where's my
we're going over
Discord?
case studies now.
Let me.
Yeah, we can go over some case studies. Yeah.
Okay, great.
I only have like 25 more minutes.
Forward to okay.
You could either save it and place it or
On the trading lounge, okay, or trading chat. I think I already
Okay,
I
yeah,
sent
yeah,
it.
perfect. Let's see.
Okay, let's see. I'm gonna send it. I'm gonna send the reward, I guess.
See.
So at first I was for some
Hold on, let
reason
me
I
pull it
was
up. Let me pull it up. Hold on.
okay.
Oh, this is that seasonality I was talking about. Entering the month of August, we're usually a little bit bullish on the US dollar. So if we get a transition, then hopefully for the rest of the year, we have a bias. Let's see.
Yeah, that's the one.
Is this the first picture? Am I looking at this as the order, right?
Yeah, that's the order. Like from beginning
Okay.
to yeah.
What are the symptoms to get out of a trade? I have no idea what you're talking about, brother.
So
Uh-huh.
as you can see, the trend was going up, or the direction of the market was going up. But for some reason, I was in my head the range, like the whole leg. I was confused of which area to have my range of the day. But as we see, it was going down, and as you can see, I marked my higher time frame like inefficiency. Um,
Here. Yeah, go ahead and send you guys the case study so we can get through these. Don't know why these. Let me zoom these in real quick. All right, where'd you go? All right, where'd you go? I'm gonna give you like, I don't have that much time, so come on with it. All right, we'll just move on. See if they come back or not. And let me see.
I sent some if you could.
Yeah, I got you. Yeah, opening yours up right now. This one's to load. Okay, I think that's 1 and 2. Okay.
Okay, if I could explain the first one. The first one's a loss. It's the one on the left.
Uh-huh.
And I kind of saw this, liquid grab continuation. We're bearish, and I saw it. But then it just, I got in, I got stopped out, and this is the trade I should have taken, which was this one on the right. But I feel like I'm missing something because this was a liquidity gap continuation. It was good momentum, but it just maybe because it was just in the New York Open, like 5 minutes in, maybe I shouldn't have traded.
No, no, no. So this is so remember exactly what you told me. So like you're telling me, is this not a CBOS continuation?
It is.
And is this not a CBOS continuation?
That's what I'm saying, man. We
Exactly,
are
bro. So
externally
okay,
bearish,
hold on, hold on,
but
hold on, hold on. So
sorry,
you have
sorry,
a
sorry.
point of reference. You have a point of reference. Oh shit, wrong one. you have a point of reference here, right? That's your point of interest, right?
Yes.
Because that's the last buy to sell. Technically, this is the last interruption in price before we get a move down. So if you want to be conservative, right? Doesn't matter what you entry take. If you want to be conservative, then your SO has to be here. But you will trying to look for the internal risk reward is your risk. So this one, right? They're both essentially they're very similar, right? Except one is actually a clearer. It's a more of a clear, in my opinion, LGC rather than the other one. This one, there's a wick here, whereas this one there is like an intentional bullish move and then an intentional downward move. So if we're looking at this from, I guess, structure point, let's see, low into high, low into high, and then looking at this, let's see, from an internal POV, excuse me, it doesn't seem like either way from a structure POV, both of these trades are essentially the same. But you have to
Yeah.
understand that the technical conservative stop loss is there. That's the invalidation point technically, right? And then now you see that if you worry about being 100% conservative, which will get you a higher win rate, you will sacrifice the risk to reward. So are you willing to take a -1 loss and then what is this, like a 1 to 1.45
Yeah.
ish? Yeah. So yeah, plus 3.5, or you can just get one scenario and it'll be like a 1 to 2 maybe at most, right? So then that's the risk that you take. So you also have to understand, bro, these models are not 100%. No model will ever be 100%. The only way for something to ever be 100% is if the market condition is correct, the direction is correct, the model is correct, right, and the execution is correct, and the exit is correct. But you can't know that until the result is obtained, right? So that uncertainty will withhold you from ever having something that's 100% correct. So
So how
I
are you
would
more
not,
probable?
I would not worry about this at all. You should take the same setup because you want over time your probabilities to give you the profitability.
But it's
Because
more
you
about
cannot let
timing, I think.
sure, sure. If that's how you want to cope with it, sure. Like at the end of the day, you don't I would still take this again. If I was you, I would still take it again because because it doesn't matter as long as at the end of the day you're profitable. And then over time, once you're profitable, then okay, now you can figure out how to become a little bit more efficient, whether it's improving entries or it's improving exits, or you can start to make your risk a bit more dynamic. Whereas if you have a certain confirmation, you can increase your risk. Whereas then now the old scenario that used to give you losses will give you less losses compared to the biggest winners, right? Like I wouldn't worry too much. You don't want to over detail everything. You know what I'm saying? Because your goal is not to be perfect. Your goal is to just be correct over a certain amount of time. And the only way you can judge that is based on the overall return. You know what I'm saying? Which is the risk plus the result, right? Multiplied by like the amount of trades.
Thank you.
Yeah, you see what I'm saying? So there's no you have no reason to be discouraged here, right? It's just part of the game. Cost of doing business. Because the only way you can fuck yourself over in a loss is if you let it burn you twice, right? If you let a loss will obviously hurt you at first because it's a loss, but then you can't let it burn you twice by letting it fuck you over in the next decision that you make. You see what I'm saying? So each scenario is new, each day is new. There's gonna be another opportunity the next day. So take a loss as long as it's controlled, then who cares? As long as you
I
know
guess,
that that scenario works, and
yeah,
you
yeah,
already
the
know that if it
idea was
works,
there.
exactly, and that's fine.
No.
Yeah. All right. Any more case studies? Anybody?
Yeah, I sent you another one.
Oh, the other one. Yeah.
Yeah.
And you see, since you're a scalper, so for example, the my EU trade is against you because my scenario was an intraday scenario. And I was looking at the micro transition for the intraday scenario. So then you're telling me that the scalp is bearish. Well, like yes, the scalp is bearish, but the micro was bullish and the minor intraday was bullish. So that was enough for me.
Yeah,
So you
actually, I
see why
have a
it's different?
trade before you. Like, it's fine. I'm
Hmm.
gonna send it as well. Yeah. This was the
Yeah,
win
see, like
for the
these are
week.
this is the what honestly this is the one of the traditional A plus setups where you kind of just look at the continuation, the bounce of the scenario, and then right you look at that. This is a one of those A plus scenarios. Like if you can make the scenario happen in your favor a lot of the time, then you can justify that as a type of scenario where you can increase your risk.
No, I would like to say this one's actually the same as the last one over here. You get what I'm saying? And if you take this POI, you still get stopped out.
It
And
did, it
here I
didn't,
was on the
it didn't touch it though.
I mean on FX it touched it like barely.
Okay.
That's what I'm saying. Here in the timing, I was in the third one, or the third LGC, which was a win, and the other one was in the second one. I guess it's kind of like a 1, 2, 3 in EU. I don't know. Maybe I see something, but it takes 3 times liquidity, 2 times, and then it goes.
I wouldn't focus on that. I would focus on maybe trying to reference maybe a higher time frame, which would be like a M3, M5, and see if you can refine either the point of interest where the bounce can come from, or if you can get an engulfing, or if you can find your same confirmation on a higher time frame, which would be the M3, M5, because that would make you a little bit more selective,
I guess the engulfing,
rather than just working on just letting everything be on M1.
This was a 2-minute engulfing, and this before, and there was no engulfing, so I guess that's why this
Like
one
what
works.
broker are you trading with?
MetaTrader.
No, that's not a broker. That's a software. That's a
With a funded
again.
account.
Oh, okay, you're at the funded account.
And I sent
Oh,
another one.
so you're not in the US.
No.
Oh, okay.
This one was
And yeah, Booba, you were right.
exactly before you took that transition. This was a trade.
This is, I don't know why this is blurry. Let me see.
Oh,
Yeah, that's fine. It's okay though. A bit aggressive, just because I don't like when there's like efficient pricing, like so many wicks and stuff. I like to see like intention and engulfings, because an engulfing will by default leave a inefficiency behind. But it does technically solidify here, does solidify this high. So as long as your stop loss is there, then it's correct. And this is actually why I started to incorporate a lot of Fibonacci as well, because sometimes I will not get the I will not have the reference point to have like here. And just because of structure, right? If this is to be broken, then if this is to continue lower, then it will not break here. Because if not, then that's disruption.
yeah, I guess this one was aggressive as well.
But from a structure POV, technically it's correct, you know, because it solidifies this high, and then that solidifies the high, low, retrace it.
Thank you.
That
was what I did for this week.
Hey Fredo,
Nice.
can you please analyze the trade I did? I want to see how you would see it from your point of view.
Okay, so you want to be bearish.
And I don't know how to mark here, but
That's fine. I can read it. It's fine. It's fine.
okay.
Okay, you're looking at the inefficiency fill, but you have a limit set, right?
Well, I didn't trade it. I was just looking at it as I
Okay,
said,
okay.
as I
Well,
mentioned.
technically, it's a limit scenario,
Oh,
right?
okay.
So I would say it's fine. I just think that I would not. Oh shit. I would never ever, like, especially with an inefficiency, right? I would never ever leave a limit. Just because this is considered predicting price. And I don't want to
Okay.
do that. And if I'm going to do that, then I'm going to have my stop loss at the invalidation. So here I would have, because there isn't a buy to sell here, then I would just have this entire move that's the buy to sell as a reference point. And then that's my position. And then I would look for the target that you're looking for, which is down here. Yeah, 100% justified there. That's fine. Because that buy to sell is actually present here in the scenario here. So let me pull that up on the chart real quick, just so you can see. That's M5.
And just to make sure, would you call that an order flow disruption? I was just because I was so confused. As you can see, I put
I
a
don't
question
know.
mark.
I don't know which one you're considering out of order disruption.
It's right there, the inefficiency right there. Yeah, right there. You know how it broke through?
Well, there's no react. Well, based on this time frame, the reaction wouldn't be confirmed until this breaks. So if you have the reaction, then that's order flow disruption. based on this time frame. Based on this time frame. Like there is no reaction. So if there's no reaction, then there's no order of disruption.
Okay, let me ask this. I know it might not be the what do you mean by reaction? Like it just goes up or like
Then I would recommend you to go through the material that we have. It's you have a point, you have a POI, you have a
Mhm.
reaction, which is a CBOS or any type of BOS,
Oh,
then it
okay,
breaks
got it.
through, and that's why you have the reference point.
Oh,
I would
okay.
recommend you to go through all this stuff before you ask me. I don't like answering like simple questions on here, so please like go through the material because people are here because they want to either go through the scenarios after they've studied. So I would just do that first. Right, so that's fine. I wouldn't. I mean, I'm not opposed to this. I just think you're predicting price, and if you're going to predict price, then your stop loss has to be at an invalidation. You don't know what an invalidation is, then go look through the content or go look at the book.
No, I understand.
Mhm.
It's just I just wanted your point of view,
Yeah,
you know.
that's fine. Yeah, but it's fine. This is good because at the end of the day, it's a winner, which is fine.
Okay.
But now you just want to make sure that you learn how to take these in real time because that's the point, to take
Yeah,
these
yeah.
in real
No,
time. Yeah.
this was real time. This wasn't real
No,
time.
no, for you to take it, for you to take it.
Oh, okay. I see what you mean.
Okay.
Gotcha.
But yeah,
Thank you.
no worries. But yeah, the target actually is really good. See, this is the perfect target just because it's a solidified point. And because you already took through here and you've already had the internal breaks of structure, everything is good. I would just fix the stop loss placement.
Okay.
Mhm. Which video covers all entry models? I never posted anything on entry models on YouTube. That's in the book only. And I never covered sweep on there. But yeah, actually, I have a question. What do you guys trade right now? Like, are you guys on CFDs? Are you guys on futures? This is the last thing before I gotta get off. Are you guys on CFDs? Are you guys on futures? And are you on a broker? Are you on a prop firm? Okay, cool. Anybody else? Just a quick, yeah. Okay, so CFDs, real IC market CFDs, funded. I personally will only ever go. I don't even like funded accounts just because of the business model. But if you actually have an edge, then I think that's an easy way to multiply your money. Gold personal. Yeah. So I don't know if you guys know this, but everybody here has heard of IB agreements, correct? Do you guys know how those work? Where people who like send links to brokers and then they get commissions and all that. Do you guys know how those work? Okay, so let's say you have a big channel on YouTube. Let's say you have like 50,000 subscribers, blah blah blah. And then an IB agreement is called an introducing broker agreement. 100% legal, nothing scammy about it. Affiliate marketing, yes, to an extent, right? It's an incentive. It's a way for a broker to incentivize somebody with an audience to bring in more clientele, which means that so whenever it comes to most brokerages, right, especially regulated, right? I'm speaking about regulated here. I'm not speaking about unregulated. I think affiliate marketing with unregulated brokers is a bit scammy just because they can take your money one day and you just would be fucked. But there's two different kinds of accounts. There is obviously the ECN account, which is usually the low spread, high commission types of accounts. And then there's the STP, which is straight through processing, which means that this one has like a fixed spread, but it has no commissions. So how these work, right? When it comes to introducing agreement brokers or introducing brokers agreements, that the ECN, right? Let's say for a regulated broker on average, it would be like $6, right? For every lot size that you take for that broker per broker, right? Yes or no, give or take. I don't know if you guys can like, especially with IC markets, I don't know if it's $4 or $6. It's one of the two, but your spread is probably like at zero, right? Whereas with STP accounts, the amount of the amount of commission that you have to pay per lot size is zero, but yeah, seven. Okay, that's fine, seven. But the spreads start at 1 pip, right? So it pretty much it's minus $6, but then if you have like an ECN account, then the zero spread compared to the STP 1.0 plus spread, it's pretty much the spread on the ECN plus 1 pip. That's pretty much what the STP is, but it's minus $6. So if you think about this, then that means that the broker per lot size that you take, right, at a zero spread with a $6 per lot size, that means that the broker is making $6 per position that you take on average. This is just for an example. And then with the STP, let's say you have like a 1.1 spread, right? But a $0 commission. That means that if it stays at that same spread, then the broker's making $11. So how how introducing agreement broker works, right, is based on this $6 and this $11, the person who brought in that individual will get a piece of the pie. So let's say on average, for every lot size taken, someone will get $2 for the ECN account, right? Whereas for the STP, it's a lot more because it's more profit. It could be like $5, right? That's how those introducing agreements work. And I actually have one with Vantage because they had offered it to me, but I went with Vantage because they do like crypto deposit withdrawal. They're regulated, and I get all the benefits like the zero spread and shit like that. And I was thinking, and I'm like, you know what? Most of like the people that have these introducing broker agreements, they only have or they keep all of this for themselves. So I'm like, hey, like, let me make a deal where if people come in using, let's say they use Vantage, because that's really the only broker I'm going to use. I don't use IC Markets because they don't let me withdraw to American bank account. But with Vantage, right, I'm gonna try to structure some type of thing where if people are within my link and then they give me their name and account stuff, like the details, so I can look them up, I will give them, let's say, $1 here, and then let's say like $3 here. Does that make sense?
That's a thing?
Yeah, it is a thing. It is a thing. You didn't know this was a thing? This is how brokers
No.
get people to come in. Yeah, bro. People make a killing. Anybody on YouTube who has an
That's
affiliate
how
link and
they
has
make
like
money.
no, okay, no. Hold on, hold
They
on, hold on,
don't
hold on.
trade.
Oh, shut up, hold on. No. This is this is a source of income. I don't know if they trade or not. I really don't give a fuck. Like I really don't give a fuck. I'm just telling you what this is. Like I don't know who you would be referring to, but I'm saying this is a source of revenue. So the way that people make money in the trading niche, it's either through trading, it's either through mentorships, it's either through boot camps slash workshops, it's broker deals where they get paid to promote them, or they do introducing broker agreements where they split the pie. All this is doing is bringing in a brokerage, more volume, and then it's just a commission. It's sales, bro. It's sales. Like you know what I'm saying?
Yeah, it's cool. It's cool.
Yeah. Bro, that doesn't, bro, I don't know what you jumping to these conclusions for, bro. Relax. Like, what the fuck? Like,
Yeah.
yeah,
Having a
but
little
no,
fun
but
with it.
I actually, since I was talking to them, I was like, because they were telling me like if I was to bring someone with like a lot of capital or someone with a lot of like a big group, I'm like, hey, you can give them like a piece of your pie here, and I'm like, well, what if I just do it for everybody that joins with my link? And then I kind of asked them that, and then they're like, yeah, I mean, I don't see why that doesn't work. So. I'll give some more details, but if you guys want to get rebates for every position that you take on the regulated broker, like let me know. Because I do
I
have
have a
my friend that
question.
trades with me, and he does like 5 to 10 lots per trade on a STP, and so he gets like $40 to $90 ish per position that he takes, even if it's a win loss. But yeah, let me know. Let me know your question is, bro. I do gotta go soon. Come on.
Is the private Discord active?
Yeah, it's active. It's active every day. But there's I think there's only like 20 members plus the admins,
Thank you.
give or take. But I'm gonna increase the price on that too. Actually, I think like 2 weeks or so, because I'm gonna add this offer here, and then I have one offer for people who were in the group back in the day that's gonna expire at the end of the month, and then I'm gonna increase my price on everything just so I can give myself more time. Because if I increase the price, people will be less willing to pay for the stuff, so I can have more time to do other stuff. But yeah, I'm gonna increase the price on that. I think it's like 350 now, which is stupid cheap. Like honestly, like borderline not worth my time. But I'm gonna increase the price on that probably like 2 3 weeks now. But yeah, any more questions, concerns? If not, I'm gonna wrap this up, guys. I gotta go.
You mentioned a few Zooms ago you're gonna start a workshop, right?
That I did that. I said that last year. No, I'm probably not gonna do that. I don't think it's worth my time. If people need my help, they just hit me up and we'll do either a one-on-one or something like that. And then I think that's the best way to go about it, especially because one-on-one help is a lot better than one-to-many help. So yeah, if you guys want anything on that, then all the details are in the Discord. Everything that's offered is in the Discord.
One last thing, you on your private Discord, do y'all do like private more like Zooms or like
I
it's
do
more
I do
like
reviews of all of my positions, and I do like unlisted YouTube videos.
okay.
But in terms of like trading live and trading together, no, I think that's kind of bullshit. Defeats the purpose. But yeah, I think we can go ahead and wrap it up here. Any more questions, concerns, everybody? Nope. Cool. I guess we can wrap it up here.